Welcome in. I am the Crypto Bull God, and in today's video, we're going to examine two charts. We're keeping things very simple today. I felt it would be helpful to provide a quick update to the community. Two key charts I'm looking at, try to simplify our lives, not look at 5,000 charts. And as I always preach, keep it stupid simple, right? So if you appreciate the content, please make sure to give the video a like, a comment, and subscribe to the channel. If you find the content helpful, you can find me here in the Twitterverse at CryptoBullGod. You can also find me on Tradingview, YouTube, and Instagram at CryptoBullGod. Just a quick disclosure before we get into everything that none of what I'm sharing is financial advice. I'm looking to educate, to help and spread sound technical analysis to the community to help others in making informed decisions. However, the ownership falls on you to make your own personal financial decisions. So let's get into it. Yeah. All right. So this is the 12-hour chart. Okay. As I tend to preach on this channel, as we tend to zoom in on a smaller time frame and begin to see a bullish narrative begin to build on a smaller time frame, as long as that continues, that will bleed over into higher time frames. There's plenty of other videos out there speaking to weekly and monthly charts. I'm not going to get into that. But as you know, and I'll leave a link in the description, if you found value in the Bitcoin chart that no one is discussing, the 12-hour chart holds a lot of historical significance. Okay, so I'm going to continue covering this chart. Now, on this view here, what I'm showing is a low and a lower low and four lower highs being built here, okay? Now, we succeeded in taking out this number 4 here, this lower high. So we can actually delete this, okay? We can delete that guy because we had candle body closes that occurred above around the $45,000 area, okay? So we took this one out. The next goal is to take out number 3, okay, this next lower high, and this is at around, we're going to call it 52,000. So what we want to begin to see is we want to begin to see candle body closes in the 12-hour chart above $52,000. Now, we are going to run into some headway here, okay, some roadblock, because as you can see, let me stick this out here, consistent with other videos, the pink line is the 200 SMA, and the purple line is the 50 SMA, okay? Now, typically, moving averages either act as support when you're above and resistance if you fall below. As you can see, we are below the 200 simple moving average. This area right here is going to act as resistance. And right now, we're sitting at around, it looks like 48,500. Now, one of the nice things I also wanted to point out to see that you really want to focus in on within this chart is that it's really good to see this 50 simple moving average flattening out. As you can see here, we had a downtrend. The 50 moving average, we had the death cross right here, down, 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 down. But look what's begun to happen now. Now we've begun to flatten out, which is great to see. We want to see the 50 simple moving average act as support. What this means, and then obviously we want to see the 50 simple moving average curl up and create a golden cross in the 12-hour view and cross above the 200 simple moving average. But what does this mean? This means that price could fall all the way down to around 39,500, and we can wick below the 50 simple moving average because, as we know on this channel, price wicks are an expression of what? They are an expression of volatility. So we want to see candle body closes at or above this 50 simple moving average to express strength within this view, okay? And then, again, that's around, we're going to call it 39,500, okay? As long as we can stay right at or above 39,500, in my opinion, based on history, we're good to go. Now, ultimately, what we're looking for, right, is we're looking for price to resume back up. If you followed the other videos that I have on the 12-hour chart, which I will, again, leave a link in the description, the most important thing to see, really two things. One, we want to see price come above the 200 simple moving average, and then we want to see come above and stay above the 200 simple moving average. Then we want to see this 50 simple moving average cross above the 200 simple moving average, okay? If that were to occur, history is on our side to say that the bullish momentum and the bullish narrative within crypto is really going to pick up speed, and we're going to see things turn around pretty quickly. Now, on this view, I think there was a little bit of people were inferring things based on what I was saying that were not accurate. So let me make sure that I explain this very well. One of the items that I pointed out in my prior Bitcoin video on the 12-hour view, I discussed that once we got this death cross, okay, once we saw candle body closes below the 200 simple moving average, okay, once we saw that, what history said, if we remove outlier periods, meaning the periods that were extended, year plus bear markets, we could expect price action to remain below the 200 simple moving average anywhere between 51 to 132 days. And I have that outlined here. So anytime between the 24th of January, which we've passed, all the way up until the 15th of April, that is what the history of Bitcoin has taught us in the past 10 plus years, around 10 years, I guess it was, but around 10 years of price action. Once we have those candle body closes below the 200 simple moving average, we can expect to stay below this 200 simple moving average between 51 to 132 days prior to getting back above it and prior to beginning the last leg of this euphoric journey, which folks we're still very much in store for. Now, what's this blue line? Let me make sure that I clearly explain this. This is simply an average. Take 51 plus 132. Okay, that's 183. Divided by 2, you get 91.5. 91.5. So, yeah, 183, 91.5. Doing that on the spot, So what this is saying is this is the average point in time in which the bullish narrative has resumed, where price action has gotten above the 200 SMA on the 12-hour view, and we've continued onward and upward, okay? So anything less than the average would mean we're beginning our upswing a little sooner than what we've on average experienced. Anything after the average point is a little bit longer than what it has taken on average. So it's March 5th is a good point in time to take a look at, because around that time frame on average is when we can expect to begin to see price action turn up. Look, history tells us, and this is all we can do, it's no guarantee that it won't take longer than the 15th of April. Okay, we're just using history to plot these points out, these two plot points between 51 and 132. There's no reason that it won't take until April. There's no reason that this month we can't shoot back up above 48,000. Okay, I'm just saying this is the average point in time is March 5th. So hopefully that made sense. Now, this is the first key chart to take a look at. Once we begin to see bullish momentum turn around and we see candle body closes resume back above the 200 simple moving average, and we see the 50 simple moving average cross back above the 200 simple moving average, and we get our golden cross, that's a very good sign. The odds are in our favor that things are going to start to get epically very bullish very quickly. Okay, so this is chart number 1. Before we get into the last chart, chart number 2, make sure that you like the video. You're subscribed to the channel if you appreciate the content. It's helpful. This is going to spread everything throughout the community, okay? And make sure to drop a comment. I do love engaging with everybody here. All right, so this is the DXY. This is the next chart that I would strongly suggest that everybody pay attention to. What are these red arrows? These red down arrows, let's focus on these two. Every single time the dollar index, the DXY, this is on a monthly, every time the dollar index has had a strong turn downward, cryptocurrencies have had a massive push upward. So they're inversely correlated. As the dollar is falling, cryptocurrency markets are going pretty crazy to the upside, okay? Now, what am I also showing here? I'm showing a hypothetical red line. This is what I'm theorizing will happen, hypothesizing as to what will occur. So this red line that I discussed on my last video, this is a historical area of resistance. And what I'd like to point out to you is you can see by these blue circles, okay? What you can see is every time we got in this price area, price was rejected and we went down. Price is rejected. Remember, price wicks are an expression of volatility. We went all the way up here, but we ended up closing way down here. And we ended up going down. Massive run in crypto. Massive run in crypto. Look what has just occurred. We've just hit this red area of resistance, okay? Not only did we hit a red area of resistance, but there's also this black line of resistance. There's 2 points of confluence here that I was pointing out. We also have this line of support. If we zoom in here, you can see the uptrend starting right here. You see this area right in here. Okay, we bounced here. We bounced here. Now look what happens. This was an area of support, correct? But look what happens in 2020 once we closed below. See how we closed below this black trend line? It's now an area of resistance. It's now an area of resistance right here. So we have 2 points of contact. We have the black line, ascending line, which we've closed below, that is now, it once was support and now it's acting as resistance. And we now have this red downward trend line. Look how historical this thing is. Touch point here, touch point here, touch point here. We have 2 major areas of price confluence and resistance for the dollar to go up. There's no reason that the dollar can't punch through there, but there's a lot of headway for the dollar to get back above there. And so between my view in the cryptocurrency market and what I'm expecting for a last euphoric leg within the market, it makes complete sense to me that this will act as an area of resistance. A lot of other things going on in the economy, but this will act as an area of resistance, and we will see, I'm theorizing, a downward trajectory in the dollar, which will also lead to an inverse relationship once again within crypto, and crypto will be shooting upwards. There is one more view that I wanted to point to here. Yeah, so this is kind of just pointing to the same thing. There isn't anything that I haven't touched on in prior videos. Basically, there's a trend line right here, as you can see, a trend line right here, as you can see, and I'm theorizing that once the dollar bottoms, we could intersect with this gray trend line. I also pointed out this black downward line here that we've intersected twice. And there's a little bit of, once again, price confluence right in this area that I could see the dollar bottoming in the 80 area. And we're currently at around 96. So these are the 2 charts that I had prepared for you. That's all I have for today's video. I hope that you found it helpful. Again, subscribe to the channel, drop a comment, leave a like. And until next time, please, 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 please carry the education forward.